This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, April 28, 2015. Euro dollar. So the euro remains locked within a consolidation over the past several sessions, though the market still remains locked within a well-defined downtrend. At this point, there is room for additional corrective activity up towards key resistance around 110.53, while only a break back above this level would compromise the immediate bearish outlook. Instead, a lower top is sought out somewhere ahead of 110.53 in favor of the next downside extension back towards and eventually below the recent 12-year low at 104.62 and towards parity further down. Sterling dollar. So cable continues to extend its impressive correction out from multi-year lows down at 145.65, with the market now trading back above 152 thus far. At this point, there's room for additional upside towards the 78.6 fib retracement off of the key 2015 high-low move, which comes in around the 153.40 area. Ultimately, only a break back above the yearly high at 55.52 would compromise the bearish outlook. Dollar yen. So dollar yen continues with its consolidation roughly between 118 and 122, with any setbacks very well supported ahead of 118 and a rally favored eventually back above 122 to continue with the broader underlying uptrend in this market. A push above 122 will open the door for the next major upside extension towards the 125 to 130 area, while ultimately only a daily close or break back below 115.55, that low from December, would compromise the bullish outlook. Euro Swiss. So Euro Swiss is doing a really good job of recovering in recent trade after the market based out at 102.35 in the previous week. At this point, fresh upside is seen following a break above the recent high that we saw around the 104.30 area, and this should open the door for the next upside extension back towards eventually the 108.15 high that we saw going back to the 20th of February. Ultimately, only back below 102.35, that recent low, would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has been very well bid in recent trade, though the market is coming up against some stiff resistance in the 79.38 area. Only a close above this level would compromise the more immediate and pronounced bearish outlook, while inability to close above 79.38 keeps the pressure on the downside for a lower top in favor of an eventual retest and break of that recent 75.33 multi-year low from the 2nd of April. Dollar CAD. So dollar CAD remains under pressure since breaking down below some key support at 123.50, and this has opened the door for a measured move downside extension towards the 119 area. But ultimately, the broader trend still continues to favor the upside, with a medium-term higher low sought out in this area ahead of a bullish resumption back above the recent 5-year high at 28.35 and towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi has seen some nice corrective gains over the past several weeks, with the market rallying up above 77. But any rallies are considered to be corrective, with the market looking to put in a medium-term lower top ahead of a bearish resumption back below 71.76. Ultimately, only a break back above 78.90 would compromise this bearish outlook. SPX 500. So despite fresh record highs on Monday up towards the 21.26 area, the market was unable to establish a close above that previous record high from February at 21.20, setting up a bearish outside day formation, which could now open the door for more significant declines in the sessions ahead. At this point, though, a break back below the low that we saw on the 11th of March at 20.40 would be required to take the immediate pressure off the top side and open the door for a more significant top in the S&P 500. Gold. So gold has done a very good job of being supported on recent dips, with the market unable to establish a close below that recent low that we saw on the 31st of March at 1178. The inability to close below 1178 has supported that dip, with the market racing higher back above 1200 in recent trade. At this point, the basing outlook remains intact, though a break above 1224, that recent high that we saw on the 6th of April, would be required to further strengthen this outlook and open the door for an acceleration of gains. Only a break back below 1175 at this point would compromise the basing outlook for gold.